We're up 200 on the Dow and up 140 on the Nasdaq, and the S&P is up 0.72%. Modest rally. Michael Lee with me this morning. What do you make of the latest CPI numbers? 3.4% inflation in the last year at the consumer level. What do you make of it?
Yeah, well, Stuart, the miss to the downside is very timely for the markets and for the Fed. And alongside that, the big miss in retail sales is what I think is giving the oomph behind the market today, in that retail sales has been a leading indicator of CPI by about 3 months. So it's looking like CPI should track down from here if those trends hold.
So you think there's, I'm going to call this a modest rally that we've got going at the moment, and you think it continues?
Yeah, well, Stuart, yesterday we closed at an all-time high in the Nasdaq, and so, ideally we're going to close at another all-time high here. And if the S&P holds up today, that's 9 days in a row. That's only happened a few other times in history. One of them didn't lead to, one of them was a peak in the markets, and then two of them led to much higher markets going later. So not a lot of historical precedent for that. But look, we are in a bull market. Okay, the market is up substantially since the October lows. I don't think we're stopping anytime soon, because think about it. The next move from the Fed is likely a rate cut. Okay, you have earnings come in above estimates, and estimates for later in the year are increasing. The Fed is also likely to stop quantitative tightening and move to quantitative easing. So we have growing earnings, a somewhat improving economy, or an economy that's not necessarily falling off the cliff, and improving liquidity. These are the things we like to look for what you've referred to me as previously as Mike Lee, the Super Bowl.
Yeah, you're back to that status. Well done. Mike Lee, Super Bowl. Thanks for joining us this morning. See you again soon.
Thanks, Stuart.
Lawrence back here looking